stop before you file your crypto taxes this year or whatever type of tax you're dealing with. Your exchange just sent you a brand new form directly to the IRS. And if you trust the number on that form without verifying it, you could be handing the IRS $14,500 that you don't owe. I'm going to show you exactly how this happens and exactly how to stop it. So stay with me. Once again, I'm Sam. I'm an IRS Enrolled Agent, former Big Four accountant, tax advisor for EY and PwC, and I've spent years helping high-income investors keep more of what they earn. And right now, with April 15, just a few weeks away, this is the most important video I've made during this season right now, because what's happening with Form 1099-DA, something your accountant might not even know about. So here's what most people think. My exchange sent me a tax form, I plug in the numbers, and I'm done. That's not just wrong. My mindset is exactly how the IRS ends up with more of your money. The 1099-DA is one of the most misunderstood tax documents to ever hit the crypto space. And the dangerous part, it looks official. It looks complete, but it has a hole in it big enough to drive a truck through. So before I get into the mechanics, if you're new here, hit the subscribe button. Hit the notification bell as well. All right, I put out free newsletter every week at empowercapital.co, and if you need tax guidance as well, reach out as well. I break down exactly what's happening in the crypto tax world, stock market, wealth strategy in plain English. So link is in the description. So let's talk about why this form is costing people real money. So question I want you to hold in your mind, okay? What happens when the IRS sees a number on your tax form that's completely different from the number you report? I'll answer that question later in the video, and the answer is going to surprise you. Let me back up a little bit. So starting with the 2025 tax year, meaning the return you're filing right now, every major centralized exchange in the US, Coinbase, Kraken, Gemini, all of them, is required to send Form 1099-DA to both you and the IRS. This is new. This has never happened before in crypto. This has never happened before in crypto. 1099-DA stands for digital assets, right? So 1099 for digital assets. So think of it like a 1099-B, the stock broker document that they send to you. It's reporting your crypto sales directly to the IRS. For the first time, the IRS isn't relying on you to self-report. They now have data coming in from the exchanges themselves. Yikes. So now here's the critical thing you need to understand about this form in the current state. For 2025 tax year, brokers are only required to report gross proceeds, right? Your sale price, not your cost basis. Now what you originally paid for the asset, right? Let me say that again. The form shows how much you sold for. It doesn't show how much you paid for. So no cost basis shown. So if you bought Bitcoin at 40K and sold at 74, you made $34,000 gain. That's what you owe taxes on. But if 1099-DA only shows a 74K in proceeds and there's no cost basis listed, what does the IRS system assume? Zero, right? The IRS computer sees 74K in proceeds with no basis and flags the entire 74,000 as potential taxable income. That's the trap. That's the problem. You got it? So how do we deal with this, right? So anyways, and it gets worse. So because it's not just about a missing number on a form, there's a structural problem baked into the entire system, right? That your exchange literally cannot fix, even if they wanted to. So let me explain what I'm saying. So the cross-platform problem, right? Why the cost basis disappears. So that's basically what I'm about to explain right now. So here's a scenario playing out for millions of crypto investors right now. You bought Bitcoin in 2021. on a DEX, right? Let's say decentralized exchange, right? Or you bought it on one of the exchanges like Coinbase, Kraken, Binance, moved it into a hardware wallet for safekeeping. That's smart, but not your keys, not your crypto, right? You've heard that. So you moved it, right? Then in 2025, when Bitcoin ran back up, right? You moved that crypto back to Coinbase to sell it. So Coinbase reports the sale. The sale on your 1099-DA, they show the proceeds, but they have absolutely no idea what you originally paid for that Bitcoin, right? Because of all those transactions that took place, right? Because you didn't buy it on Coinbase, right? That data, right, doesn't exist on their platform. And under the current rules, they're only required to report basis for the coins that were both bought and sold on the same platform. The result? An IDA. Coinbase sends to you and to the IRS, shows a sale with zero cost basis, and you look like you made 100% profit. So according to an analysis of 30,000 US crypto investors, the average investor is facing 14,500 in overstated capital gains because of exactly that issue. Hence my title, right? Calculated across the estimated 46 million US crypto holders, we're talking about $600 billion in potential overstatement gains nationwide, right? $600 billion, right? And most people don't know this is happening to them. They get the form, they give it to their accountant plugs in the numbers because that's the number on the official IRS form. So hit me up, and you just pay taxes on gains you never made. So here's what I need you to understand from a legal standpoint. This is not legal advice, but because this is where your enrolled agent background happens, right? The 1099-DA being inaccurate doesn't get you in trouble as long as you report the correct number on your actual return, right? The IRS does not require you to accept the DA as gospel. You can and you should override it with the actual cost basis records, right? So, but you need the records. That's the key. So how do you get that, right? That's the key. So we're over 7 minutes in and I haven't even gotten to the most important part yet. What you actually do about this, right? There are 3 specific moves I want to walk you through that could save you thousands of dollars on this year's return. So stay with me and we'll get to that as well. Okay, and one of those moves, right, the third one, is something most tax professionals won't tell you because they're not familiar enough with crypto to know it exists. I'm going to give it to you for free right here. So drum roll, right? I also want to come back to that question, right, I asked earlier. What happens when the IRS sees a different number on your form versus what you report? That answer is coming, so stay tuned. And it directly affects whether you get a letter, right, or not, right? So you don't want a letter, right? So the 3 moves to protect yourself before you file. Are you ready? All right, let's go. So here's the actionable part. 3 things you should do before you file this year, okay? Move number 1, reconcile your 1099-DA before you hand it to your accountant. Once again, if you need help, holler at me, right? You know where to find me, right? Don't just pass over the form and assume it's right. Look at it. For every line item asked, did I buy the crypto on the same exchange reporting the sale? If yes, the basis might be accurate. If no, if there was any movement, any wallet transfer, any decentralized exchange activity, flag that line for review. Pull your transaction records from every exchange and wallet you've ever used. Yes, every single one of them. Okay? You need a complete picture of your cost basis across the entire crypto history, right? This is not optional if you want to pay the right amount, not $1 more, not $1 less. We're trying to play by the books. This is what you need to do. Move number 2, use a crypto tax aggregator to build your true cost basis. Tools like Coinly, CoinTracker, or TaxBit can pull in transactions from multiple exchanges and wallets and calculate your real cost basis using the accounting method of your choice. FIFO, just first in, first out, or HIFO, right? Or specific identification, right? This is how you build the paper trail that overrides a bad 1099 DA, right? So specific identification, by the way, is often the most powerful strategy for high income investors. It lets you designate exactly which lots you're selling. So you bought Bitcoin at 65,000 and at 20,000, right? You can choose to sell the 65 lot first, minimizing the taxable gain. The IRS allows this with paper documentation. Move number 3. File the 8949 correctly and include the reconciliation note, right? Form 8949 is where your capital gains and losses actually live on your return, for all those capital stuff, right? This is where your correct cost basis goes. If your 1099 shows a different number than what you're reporting, you need to know that discrepancy using the adjustment code on Form 8949. So here's why this matters. Remember that question I asked you earlier, right? About what happens when the IRS sees two different numbers. When the IRS is matching systems, compares your return against what the exchange reported and sees a discrepancy, right? An unexplained difference triggers an automated notice. Form CP 2000, right? An IRS underreporting notice in the mail. You don't want that, right? I deal with a lot of clients and I don't like seeing that. An explained discrepancy, right? With the right adjustment code and documentation. It does not, right? So I've seen investors get CP 2000 notices for exactly this situation. Not fraud, not evasion, just a discrepancy that wasn't properly explained on a return. This is where having a qualified tax professional in your corner, right, pays for itself. Okay? Once again, holla at your boy. Holla at me, right? So if this is making you realize you need a deeper look at your specific situation, I drop a free Sunday newsletter every week at empowercapital.co or go.empowercapital.co, right? Breaking down exactly what kind of crypto digital asset tax and wealth strategy content, right? Stock market as well, right? And if you need hands-on help this tax season, we work with clients directly through Empower Capital Tax Advisors. Link in the description, right? Don't wait until April 15 deadline, okay? So to wrap this up, all right, 3 takeaways, right? Once again, number 1, do you remember? Your 1099 DA, which stands for digital asset, may be accurate, or it may be wildly overstated, right? Or maybe wildly overstating your gains, right? Especially if you've ever moved crypto between platforms or wallets. Do not trust it blindly. Number 2, you have the legal right to report your actual cost basis on Form 8949, even if it differs from your exchange reports, but you need records to back it up. Number 3, specific identification, right? Accounting and proper Form 8949, reconciliation are your 2 most powerful legal tools for reducing your crypto tax bill this season. Use them. Now, I want to hear from you, right? Drop a comment below. Have you already received your Form 1099 this year? And when you looked at it, right, did the numbers seem right? Let me know below, because your answer directly shapes what I make next. If this video helped you, share with one person in your circle who holds crypto digital assets and hasn't filed yet, right? You might save them thousands of dollars. Once again, I'm Sam. I'll see you in the next one. Remember, God loves you. We love you. All right. Stay blessed. And see you next one. Like, share, subscribe, and comment if you have anything. All right. And once again, remember that this is not legal, tax, or financial advice. Please do your own research. Past performance is not guaranteed future outcomes. All right. Stay blessed.